Well, since the internal audit report was produced, and it was, of course, the FSA which was most instrumental in pointing out its own faults, and those faults include inadequate resources devoted to some potentially high-impact firms, too rapid turnover of some of the key staff, and a failure in some classic process things to document and make clear what had occurred and to stick to the procedures. A very major programme has been put in place. It was put in place earlier this year. It is called the Supervisory Enhancement Programme. This entails the additional 218 people in focused relationship management supervision. By relationship management, we mean the supervision of those larger institutions where we have dedicated professional people to them. So that is 218 extra people, which is on top of about 500. Think of it about that.
Are they in post now?
There are 38% of the positions have so far been filled. We are doing that from a combination of external recruitment and internal moves.
You must have a fair number of poachers seeking to be gamekeepers just at the moment.
I think we could probably say that the environment for recruiting is slightly more favourable than we might have anticipated last year. That is correct. So, yes, we are recruiting people. We are making sure we improve the quality of people on average. We have designed a new induction programme for all new supervisors, which will be a 9-week course in core supervisory skills, and we will also be putting our existing supervisors through that process with a defined training and competency scheme.
It's good enough to say there's work in progress, but you certainly wouldn't.
No, we're not there yet. I mean, obviously, of its nature, when you launch a thing like that, it takes time. But by spring next year, we would anticipate that we have completed that programme.
Thomas Hurtis, in a speech of a few days ago, made a number of interesting points about Basel II and the capital adequacy regime. What steps, presumably the FSA and the Chancellor are both seeking to, and actually the Governor, all three of you, are presumably seeking to pursue amendments to Basel II to reflect the experience we've had in the last few months, and those are likely to focus on cycle.
Yes, I think that is absolutely right.
And also the adequacy of capital altogether.
I think that is absolutely right. I think if you look at Basel II and indeed Basel I, what is interesting about it in retrospect is that both of those took steps to improve the sensitivity of different relative measures of risk to the relative risk that was being taken between different banking activities. I think in retrospect, there was a surprising failure to ask fundamental questions about how large is the capital buffer which banks need. And I think we are bound out of this to end up with larger capital requirements. And I think the issue of whether those capital requirements should be made counter-cyclical is going to be absolutely clearly on the international agenda.
What we presumably don't want is each state inventing its own rules in this area where we'll get regulatory arbitrage.
That is exactly what we don't want. I think what we have to accept is that a whole series of different nation states have, in response to the crisis, taken specific action, necessary action, to increase capital adequacy in order to restore confidence. We now have a system where we have, as it were, just overridden our existing rule book. We need, as rapidly as possible, to get to an international agreement about what the future rule book should be, but that has to be a more effective rule book than it was in the past.
Timeline? Timeline on that? Because, I mean, otherwise we will be inventing our own rules in each state with the consequence I just...
Three areas where work needs to be done. One is on the level of capital requirements. Secondly, on the regulation of liquidity and the amount of capital that needs to be put aside. And thirdly, on the so-called counter-cyclical capital requirements. On the first, that's a question of judgment. There's no obvious inhibition on making that judgment sooner rather than later. The Financial Stability Forum is working on that. The immediate need is not to force banks to have higher capital requirements at present, but to have more capital. It's the buffer that matters between the two. On liquidity, we are taking a strong lead. The UK are taking a lead in the Basel Fora to bring back into the Basel process discussion about regulation of liquidity, which was never part of the Basel process and should have been. And the third, on counter-cyclical capital requirements, that will take time, I think, to get through any international forum. That's not to stop us doing it ourselves. I mean, Spain, for example, was a country that decided off its own bat to have what they call dynamic provisioning of capital requirements. Switzerland has taken action off its own bat to raise the capital requirements. The Basel framework is a minimum set of capital requirements. That's how it avoids regulatory arbitrage. It doesn't stop any country adding to that.
Sure. Nigel Beedus has asked about the alphabet soup of tricks that the banking sector got involved in, SIVs, CDOs, all of that, and how that was not watched adequately by the FSA.
Well, let me draw a distinction between that alphabet soup. There was an alphabet soup related to the area of structured credit and derivatives. This is CDOs, ABCP, CDS, CDO squared, etc., etc. I think what is really quite telling in retrospect is to understand that only 2 years ago people were saying that the proliferation of all that had made the system more safe than it was. Indeed, if you read the April 2006 IMF Global Financial Stability Report, that is exactly the story that you will get, that this complicated set of structured credits and derivatives had made possible the diversification and the spreading of risk in a way that would reduce the amplitude of the credit cycle.
I think we all know that was indeed argued.
It was wrong. It was wrong. And I think clearly there should have been more understanding of the dangers in that. But it is very easy to say that with retrospect. I think the bit which was more clearly an area where regulators and authorities across the world should have focused earlier was the other bit of the alphabet soup, which is the SIVs, the off-balance sheet. Because I think we should have recognised that things which are off-balance sheet and which essentially had done regulatory arbitrage by escaping capital regimes by going off-balance sheet are inherently risky things. And so I think it is easier to say that that was something that ought to have been spotted and things done about their capital adequacy earlier. I think on CDOs and CDS, in retrospect, there was a lot of stuff written about it which is just bizarre to read today, but sometimes, the wisdom of crowds is deeply unwise.
Yeah. The regulation of foreign banks licensed to operate here, again, the experience of the last, we'll return to some of them later in this hearing, but the evidence of the last few weeks has led you to reflect what?
I think there is a major reflection required, which I'm sure we will come back to on the discussion of Iceland, about the passporting arrangements within the European Union and the EEA, and I think a real problem of a conflict between a single market approach to passporting and complete reliance on home country supervisors. I think there are also difficult issues to do with a large global integrated financial institutions on the wholesale side, such as Lehman's, where one has to recognise that it is very difficult to take other than a global regulatory approach to those, but that when you go into administration, there is an entirely national legal approach which cuts across what has been done before. Now, there is probably no way other than to take a global approach, but that's where we get to the issues of greater degree of global coordination of regulation through colleges of supervisors and processes like that.
Kirk Guest asked about bonuses in the FSA. Any in the banking regulatory sector who've earned one?
We do have a bonus system, and I'm sure we will pay some bonuses this year, because I have to say some of them have earned them very well indeed. I think if you simply look at the sheer amount of work, and I think it was pretty good work, which was done relating to the bank recapitalisation scheme and some of the crisis management, we have had people, as indeed have the bank and the Treasury, working extraordinarily long hours and quite competently. So let me be clear, we will not reward bad work, but it is part of our remuneration process to reward good work. And we try to have a system which distinguishes that.
And of course, a fair number of FSA staff left after the Northern Rock fiasco.
Some did.
Yeah.
Okay. In terms of credit derivatives, a lot is over the counter. Are you quite content with that unregulated nature of that, or do you think they should be brought into regulation?
Well, the issue of over-the-counter regulation, over-the-counter do not escape prudential regulation in relation to capital adequacy. There is a separate issue as to whether the entire level of capital supporting trading in derivative instruments was adequate, and I think there's an argument which is not. The key issue is over-the-counter, of course, is that simply you do not have a central clearinghouse and a central counterparty. There is a massive accumulation of gross claims of the different counterparties along one another, which can make it very difficult to see where risk lies, and which can create great complexity if you do have a failure of institution. The FSA has therefore been working for some time, in particular with the Fed of New York, on ideas to put in place a clearing system and a central counterparty system in relation in particular to credit default swaps, and that is a key priority and is on the agenda of the Financial
Okay, the reason I asked that,
Forum.
Lord Turner, in terms you gave the impression in your answer to Mark that you're quite content with the present system.
No, that was not intended at all.
Okay.
That was absolutely not intended at all. That I think in relation to SIBs, etc., we need to bring them in. In relation to CDS, there is a major issue about the clearing and counterparty systems that relate to them. Yep.
Thanks. Sally.
Thank you. I wanted to ask about the credit ratings agencies, and I really wanted to ask about what the proposals are for the future rather than an analysis of what's happened in the past. We've had a lot of submissions from members of the public, including from one Derek Hunter, talking about the fact that the public have put their faith in what they thought were AAA ratings, either for banks or particular products, when these weren't founded. What's the intention, perhaps for the Chancellor first, and then for Lord Turner, about better regulation of the credit ratings agencies? I mean, it's widely recognised that that's much needed.
I agree with you, and there are moves both in the European Union and wider than that internationally to regulate the credit rating agencies. Probably it's fair to say that in Europe the whole thing is further down the track, and that there are only 27 countries involved as opposed to potentially many hundred, I suppose. But I think that the recognition is that they do need to be regulated. They are pretty important. I'll just come back to a point I made earlier, though, that I've always believed that a board of a bank should rely on a credit rating agency for an assessment, but it shouldn't substitute the credit rating agency's judgment for its own. And I rather think that happened on too many occasions. But there's other issues like conflict of interest with credit rating agencies, a number of issues that need to be looked at. So I agree with you. This is an area where we need to change the way in which you've done things.
I mean, this has been asked for a year, certainly since there were the problems with the Northern Rock. And it's not just about, banks relying on the ratings, it's also members of the public. And, in the years since I certainly recall asking these questions in the wake of Northern Rock, I can't see that there's really been any progress, and now people have lost money again, and the same cries go up again. So when's it going to happen?
Well, I think there has been a lot more progress in Europe than there has elsewhere.
But we've had the problems here.
I know, but given the nature of what we're dealing with, a solution in one particular country, especially when institutions are trading across several, I don't think would be adequate. You need to have a solution that's certainly at a European-wide level, but also much wider than that internationally. I think to try and, for us to have a solution that purely directed to the UK wouldn't be enough. And the risk is, if you did it in one country, you'd simply result in people going elsewhere, and you really don't want that. But there has been a lot of progress made in Europe, and I think further progress will be made internationally in relation to the regulation of credit rating agencies.
What?
Well, there is an agreement that it should happen, and increasingly agreement as those areas which ought to be regulated. I know it can be frustratingly slow at times, but we do actually need to get other people to come along with us on this.
Yeah, but there must be some sort of timetable by which there can be agreement and consensus and by which things can happen. We've seen some voluntary codes, but that doesn't actually improve the situation. When the credit ratings agencies came here, it was glaringly obvious that all of the issues that were raised about lack of competition, conflict of interest, over-mechanistic approach were completely justified. And yet since then, we've seen further disasters. And again, people saying, these had a good rating, we relied on them, we trusted, and they lost money.
I think the credit rating agencies were only one part of it, of the problem. But in relation to Europe, in the last meeting that we had, and the European finance ministers in September, we did make substantial progress, and I'm optimistic that we can get something agreed, if not by the end of this year, then certainly by the beginning of next, getting a wider agreement, which includes the United States, for example. That I hope can be done as quickly as possible. However, if you left America out of it, that would be rather a glaring hole in things, given how important American institutions are.
And what form of regulation take? Voluntary code or European legislation?
No, it'd be what's proposed in Europe is legislation, and I think you would also need to have. I would personally prefer something stronger than voluntary regulation, because otherwise I can see you would not make it stick. But this is something that we are discussing.
And who's going to take the lead on that? The Treasury, or what's the role of the FSA going to be in it?
Well, Adair will answer in a moment for the FSA, but certainly in terms of international negotiations, it is the Treasury, together we act pretty closely with the FSA. But, for example, one of the things that we were discussing at the meeting of the G20 leaders and finance ministers in Washington in a couple of weeks' time is the need to make far more urgent progress on a whole number of things that will, I hope, reduce the likelihood of this thing happening again.
Can I just ask, because I want to come back, there's a further area which I'm going to question later, so I just want a couple of brief answers on this. One is, we can take the timetable for the end of this year, beginning of next year, to see some real progress on better regulation of the credit ratings agencies. That's one thing. And the second thing, in Europe, okay. And the second thing is, would you favour seeing an assessment of the bonus payments, the remuneration structure of the banks or institutions included as one of the risk factors in an assessment of the creditworthiness or value of the product or bank? That's one of the issues.
I'm not sure there's a direct read across between the bonus structure and the creditworthiness of an institution. I do think
it's a risk factor. It's a risk factor.
Well, I'm not sure that is necessarily the case. What I do think is important, and here Lord Turner may well want to contribute, is one of the things the FSA is looking at, and one of the things that I feel very strongly about, is that we should avoid a situation where institutions have a bonus structure that almost drives people into taking the very risks that have brought about the problems that we've got in the first place.
That was one of the reasons why there was an assessment.
I thought you were talking about credit rating agencies still.
When they're doing their assessment of the risks of a product, that they should take into account the bonus payments and incentives around that. It's one of the issues that's being suggested.
I would prefer, I think, to deal with that problem through the individual regulator. But do you want to add to that?
Well, can I just first of all say something on credit rating agencies? I think it's very important for us to understand their role in what has gone wrong, but also, the limits to their role. What credit rating agencies did over many years was essentially try to produce ratings which, if they were successful, were accurate predictors of the likelihood of a single company or single bank bond defaulting. And actually, over the long term, they had not a bad record, not a perfect record of that prediction. What happened, I think, over the last 5 years is that, first of all, they went way beyond that single company or single bank credit rating, and they began to credit rate all of these complicated things that we were talking about earlier, like CDOs. And it turned out that these things were much more tricky to work out what their default characteristics were, that the default characteristics or at least their value was much more tricky, that they were subject to much more rapid change in ratings than the single company or single bank ratings. And there was also a problem. There were some conflicts of interest in that, and there was a process by which people were, as it were, designing these structures to get a particular credit rating agency by understanding what the model was.
Can I just interrupt that?
No,
Because,
but if you go back to their
Can I just say one thing? Because it was very clear. We had the ratings agencies here, and as other people said, they explained all of this, and they particularly explained how, in fact, they're commissioned by the people who want the product assessed. Those are the people who actually commission them and pay them, and that's where the conflict of interest.
There was a conflict of interest.
Had all of that explained.
Yeah. No, there was a conflict of interest, and there was also a problem of people relying on them to tell them something about the liquidity or the value rather than the default. And one should never have assumed that a credit rating told you anything about the market value of the instrument. It was only meant to tell you about the probability of default. I think a lot of what will happen on credit ratings will actually, of what needs to happen, will be driven by the market rather than by regulation. I think people will simply not rely in future on credit ratings for things that they cannot be relied on. So sometimes regulation is the way to respond to it, and sometimes it is the market response which will drive us forward.
Are you saying that you're opposed to regulation?
No, I'm not saying that I'm not saying that it's opposed to regulation, but I think 80 or 90% of what will now happen to make us correctly use credit ratings is more likely to come because the market will just realise it used them in an appropriate fashion, and that a relatively small amount may come from the regulation. Well, that doesn't mean the regulation isn't important, but it just means it's important for us to understand where the big impact is.
Mention has been made of non-executive directors, and we've had comments from Harold Walker, Michael Waugh, and Professor Bob Garrett has made comments. And I look at the Financial Times, and Paul Miners, your city minister, has made comments, Chancellor, where he says the typical bank board represents a retirement home for the great and the good. They're the retired titans of industry, ousted politicians, and the occasional member of the voluntary sector. If such a selection more likely to be found in Debrett's peerage than the city pages was ever good enough, it's not good now. Now look at RBS and HBOS, and it seems as if that backs it up. For example, RBS has got Bob Scott as its senior independent director, formerly group chief executive of CGNU, now Aviva, Colin Buchan, head of equities at UBS Warburg, Archie Hunter, Scottish senior partner at KPMG on the Institute of Chartered Accountants, Steve Robson, former private secretary to Chancellor, very distinguished Treasury person. We're coming now. And then Peter Sutherland, chairman of BP. So, with that, I'll ask you questions in 10 minutes when we resume at 17:47. Chancellor, I was mentioning the non-exec directors, and I finished in Peter Sutherland. But in HBOS, we've got Sir Ron Garrick, former chief exec of Weir's, distinguished industrialist on 235,000, director of Shell. We've got Anthony Hobson on 221,000, chairman of Northern Foods. Now, these are pretty distinguished people. What happened? Were they scrutinising the chief executives? Or did the chief executives just run amok?
Well,
they just turned up
I think
like
I was going to say that. As you read out that list, there were many people on that list who clearly had what one would treat as the relevant experience, professional qualifications, ability to read and think about what accounts mean. So it isn't the case that the boards of our major banks, it may have been the case 20 years ago, were stuffed with a sort of random bit of the non-relevant great and the good. They have for quite some time had often people who would appear to have the relevant technical skills. I think there is an issue, I think, about simply the total amount of time that non-execs spend on businesses as complicated as banks and insurance companies. Having been a non-executive of a bank, I have realised that to do it professionally, you really do have to put a hell of a lot of time into it. And I think we are going to have to think in future about how effectively even very competent people can really go into the detail in a, how much time they need to get into the detail. I think the other thing to say is, I do go back to the point I made earlier. A lot of very, very clever people, in regulators, in central banks, in the IMF, didn't see this thing.
Yeah, well, that's why we've got an inquiry, because it's all clever people that didn't do that.
Yeah.
But Governor, Are you going to stick your nose into individual institutions now on these issues? And maybe be a bit sceptical.
I wouldn't use that phrase. If I could take up the question you just put about people and spotting it. I mean, it's a good question, but it's exactly the question that was asked in 1847, 1866. You can go on. And
so we're never going to change anything. So
I'm rather doubtful if the need for future inquiries will ever disappear, because banking does run these risks that every now and then there is a crisis.
So you're telling me here, though, in answer to the question, Governor, that non-execs, we can't hope for them to do their job.
No, I'm not saying that at all. I'm not saying that at all.
So
what I am saying is that the question you've asked is one that was asked in the past, and the fact that there is a crisis is in itself not evidence that the individuals in charge of those institutions necessarily failed.
But Governor, this is 2008. We've put £500 million into the banks. We'll get 5,000 emails from people who are angry about these things. And you're telling us, look, things are going to go on as they are.
I didn't say they'll go on as...
Well, if that's not the case,
what I'm saying to you, Chairman, is
but phrase your answer appropriately.
You and nobody else has any guarantee or any solution that will lead you to a position
but Governor, you were brought
that
here
never
as an
will be a
expert
crisis
to give us an idea of the way forward.
We have, and I've all the way through.
Well, tell us other than we'll see this again in 20 years' time. Give us some comfort.
Exactly, and ever since I came to this committee first, back in last September, I have spelt out for you exactly the direction in which you should go, and I'm glad to say you've listened. First of all, we needed, and now we're going to get, a resolution framework for dealing with failing banks. Secondly, we needed a reform of the deposit insurance system. Yeah. And I'm delighted to say that your committee has followed that advice and has endorsed it.
But, Governor, my question
Can I keep going to what else we need to do?
Exactly.
Thirdly, regulation of liquidity. And then it comes to the international arena, and I've already explained, we will need higher capital requirements, we will need counter-cyclical capital requirements, and at the international level, we will also need liquidity regulation.
Report. How can we get better, more alert non-exec directors?
That's a matter for the companies themselves. If you want to impose that centrally from government, essentially you're saying you want nationalised companies. Private companies have themselves to choose the right people for the job.
Governor, I think you're way off the mark there. Exactly.
The problem.
Exactly.
Some banks haven't had the problem.
Well, they've benefited from having a better class of executive directors, non-executive directors.
Well, Governor,
but they have to make their own choice.
Pardon?
Can I ask us, Governor, could we have authorised people who, in other words, who have to have been properly authorised by the Bank of England or the FSA before they're actually allowed to become a non-executive director?
I have no objection to that whatsoever.
Lord Turner, give us a precise
Can I think it is important to make sure that we have appropriate non-execs, but in many cases we have. It is appropriate to make sure that they have adequate time and visibility, and I think of the issue, and we are looking. A lot of banks are looking far more closely at that in future. But if I had to identify what will decrease the likelihood that our equivalents are here in 10 years' time, it will primarily be precisely the things which the Governor has mentioned. It will be a better system of capital adequacy, a counter-cyclical system of capital adequacy, more robust and effective policies on liquidity. It is those, I think, which are most likely to decrease the likelihood of overall systemic problems in 10 years' time, more likely to do it than operating through the competence of the executives or the non-executives of specific institutions.
Jim.
Chancellor, a lot of people have contacted the Chair to ask what is the government going to do to support the housing market for new homeowners and for existing homeowners in difficulty?
Well, there's two elements to it. In relation to existing homeowners in difficulty, as I said earlier, I think in reply to Mr. Breed in relation to Northern Rock, it is important that all mortgage lenders, banks and building societies, stick to the protocol that most of them signed up to, and that is to ensure they explore every possible alternative to eventually repossession. And it's also important to look at different instruments. For example, there are perhaps sale and people being able to then lease the property they're in. There are many alternatives that fall short of repossessing a house. So I think that is very, very important. In relation to help for mortgages generally, you'll be aware that I asked Sir James Crosby to report to me on that. I will let you know. I will publish his report, and I'll let you know my response to it at the time of the pre-budget report.
People are wanting to know that the banks you've nationalised, partly or wholly, and who are doing what you've told them to do. In the case of Northern Rock, you've told them to repay you as fast as they can, and they're doing it by shutting down their mortgage book. They're asking you to accept that your responsibilities.
Well, in relation to Northern Rock, as you know, the conditions imposed on it were partly as a result of the European Union state aid rules, which mean that as a matter of...
But it's your business plan they're working to.
It is my business plan, yes, but I have to operate within the law. And as you well know, the European Union, under its state aid rules, precludes, in crude terms, us running a state-owned bank aggressively against other privately owned banks. In relation to the banks that we're taking shareholdings in, I've already, earlier in the hearing, referred to the agreements that we will enter into in relation to RBS and Lloyds, TSB and HBOS, which will bear on both lending to small businesses as well as mortgages as well.
A lot of people who've contacted the chair feel the government's hiding here behind a lot of rules of its own making, and they're saying, what about long-term fixed rates?
Which rules?
The rules you just referred to.
The state aid rules?
Hiding behind the state aid rules.
Well,
a lot of people are saying, what about long-term fixed rate deals? What about help for people to get deposits? What about help for people to switch from buying to renting, or having a combination of renting and buying? And they're saying they want this to happen now, before they're put out of their home.
Yeah, there's absolutely no rules that prevent most of the things you referred to. The state aid rules, whether you like it or not, are part of the domestic law of this country, and we can't get out of them, and we do have to stick to them. And that is the reason that Northern Rock is reducing the size of its loan book at the present time. It's one of the reasons that when you will recall there was a few weeks ago when the commercial banks were having a real problem seeing money being taken out of them and putting into Northern Rock. So it was necessary for Northern Rock to ensure that it wasn't draining the system of funds, because that would have been grossly unfair and actually very destabilising for the banking system as a whole. But in relation to helping people who are looking for mortgages, I agree with you that availability of mortgage finance, whilst maybe not the big problem we've got just now, will become a problem when the housing market starts to recover. And as I said to you, I asked James Crosby to report on that, and I'll have something more to say on that when we get to the pre-budget report. In relation to other measures, in relation to people who might convert from owning to renting, those are all measures that we are looking at. We're looking at with the banks at the moment to see whether or not we can't offer people options. But there's no rule stopping them. The question is whether or not they make, they stack up commercially, both for the individual as well as for the lender.
Now, a lot of people have contacted our chair. They're not very comfortable with what the Chancellor is saying, but they find Robert Peston even more sinister and frightening. Now,
I can't answer for him.
And in fact, some of them even seem to think that Robert Peston is the Governor of the Bank of England. Now, over Northern Rock, over the Lloyds HBOS deal, where Robert Peston was 4 hours ahead of the official market information, and over the recapitalisation of the banks, which Robert Peston announced at 9 o'clock in the morning. And a lot of people are saying this is inside information from the top. And they're saying, who's looking into this? Who's getting to the bottom of it? That's one for you, I think, Lord Turner.
Well, we are certainly very concerned if there are market rumours and information coming out ahead of when it should come out. And if there is any possibility that there is market abuse deriving from that, we will certainly investigate it.
Are you? Are you investigating?
Well, I think the answer is there is no sign that there is market abuse. Let's be absolutely clear. There is leakage of information that should not have leaked, the net effect of which is that Robert Peston has effectively been broadcasting that, right, before it is correctly broadcast, which should be in an RNS stock exchange statement. But we have no reason to believe that something is going on other than broadcast. It is an imperfect broadcast. It is not the perfect form of broadcast to the market simultaneously, which we achieve by an RNS. But as long as he is not, and nobody else is tipping off somebody to take a position before he does this imperfect broadcast, it is not an issue of market abuse. It is certainly an issue for each of the individual institutions involved as to who is leaking this. And I wish I knew who it was, and I think it's very serious that these leaks are occurring. But unless it is the case that you believe that information is being passed to people who are taking positions on it before it is broadcast in whatever the form it is broadcast, then you do not have a case of market abuse.
Well, I think people will be concerned that you say that you're concerned about leaks, but you aren't actually investigating with all the powers you have. And secondly, a lot of people who contacted our chairman are concerned that we have now a journalist who, because of these previous leaks to him, is now leading the markets. And that everything he says now carries a value and it influences real events. Now, aren't you troubled by that?
Well, we certainly are troubled by that, but we can only investigate something where there has been an offence under regulation and law. And the fact that somebody has ended up with a status where their opinion is seen as leading events or making other people take a point of view on the basis of that is not in and of itself an offence. I mean, other markets have had this at particular times, particular investment gurus who are perceived of having great insights and whose words swing markets. That is not in itself, though it might be concerning, it is not in itself any category of a offence against market rules. Now, we will clearly keep an eye on it, and this is something which we have considered whether there are any cases to pursue, and certainly I will take what you've said and look at it further, but I think we have to stick to what is an offence under market rules. We are not in ourselves, a police person of leaks in general. That is not part of our function.
Okay. So maybe just to sum up, are you active on this case, or are you passive? In other words, are you waiting for people to come to you?
We would certainly pursue it if we believed that there was any market abuse implications of it, that information was going through to... Well, we are not passive in the sense of we are continually monitoring abnormal movements in prices. That is part of the normal process of looking for market abuse, which we do through all the classic algorithmic search engines which are used to look for the way that markets are moving in odd fashions and which result in market abuse cases.
Okay, right. We're going to spend 15 minutes on the Icelandic and the Guernsey and Isle of Man. Sally, you've got 1 minute. You've got a question and just a very quick answer. What is it?
I just wanted to ask about the bonus payments, because an awful lot of people have complained about that, a large number of the emails. Apart from the sort of outrage at the scale of it, the bonus payments have also been very dysfunctional in creating some of the problems. Have you got any proposals to regulate or to try to limit the bonus payments and bonus cultures in the city?
Well done, you answer that.
We have a responsibility to look at how the structure of bonuses, not necessarily the level of bonuses, but the structure of how bonuses are paid, what they are paid for and in what they are paid, may affect risk-taking. That is our responsibility. So we are certainly looking at, and we have sent a letter to the chief executives of all of the banks asking them for information about the way that they structure their bonus payments. We will be incorporating analysis of that within our normal supervisory processes. We have the ability, if we want, to just tell people that we consider their bonus structures inappropriate, and we have the ability, if we want, to reflect inappropriate bonuses in a higher level of capital requirement. And we will certainly consider using all that, and it is also an issue under discussion among the international regulatory discussions, for instance, within the Financial Stability Forum.
Okay, we've got to 6:15. Michael.
Iceland. Chancellor, did you have a meeting with the head of the Icelandic Financial Authority at the beginning of September?
Yes. Amongst others, yes.
It was 4 weeks before their banks failed.
I think if I remember rightly, it would have been the 2nd or 3rd of September. But there was a minister for business who had some responsibility for business banking, he brought with him the equivalent of the head of the Icelandic FSA, someone from the Icelandic Central Bank, and a couple of other civil servants.
So you knew 4 weeks before the banks failed that there were some serious problems there?
It had been a matter of speculation in newspapers for several months that there had been concerns about Iceland, and by extension there had been a lot of comment about the banks. Perhaps it would be helpful if I told you the reason for the meeting, and that is that the authorities, the FSA principally, had been keen to ensure that the Icelandic authorities made sure that the subsidiary, the branch of Landesbanki, was made into a subsidiary so that we could regulate it in this country. And the Icelandic the minister and his colleagues at that time wanted to assure us that they were on the case and that they were looking after matters.
We'll come to Landsbanki. Why did you tell BBC Radio on the 8th of October, and I quote, "The Icelandic government, believe it or not, have told me yesterday they have no intention of honouring their obligations for it"?
Because on the previous day I had spoken to the Icelandic finance minister, and I specifically put to him that the legislation that they had passed over the weekend in Iceland had the effect of looking after Icelandic depositors, but cutting off non-Icelandic depositors, including those in the United Kingdom. And when I said to him, "Is that what you're doing?" he said that it was. I said, "Isn't that in breach of the agreement of the European Economic Area?" And he said he didn't think so. And I have to say to Mr. Fallon, even if I was wrong on that, which I'm not, 5 weeks later, they have still not they're still not treating British or non-Icelandic depositors and creditors in the same way as they are Icelandic ones. That's why I had to step in and guarantee the retail deposits of those people who put money into the Landesbanki branch, as well as, of course, I also took action in relation to Kaupthing and also Heritable, where we did something different. We transferred them to ING. But the reason that we did this is because the Icelandic government, for reasons that people might understand, because they clearly that the country is in very difficult economic circumstances, but I couldn't have a situation where they simply cut off British depositors or depositors here in Britain.
But the result was a run on the Kaupthing, Singer and Friedlander UK bank, which wasn't previously in trouble, which then in turn caused the collapse of KSF Isle of Man.
That is not right. Adair Turner will talk about this, but in the week prior to the FSA closing, determining that Kaupthing could no longer meet its threshold conditions, and remember, it is the FSA that decides whether or not an institution can take deposits or not, there had been concern that there was not sufficient money in Kaupthing. That's one of the Icelandic banks. And we had understood, the authorities understood, that the money would be transferred back to Britain. That never happened. And so I have seen reports suggesting that somehow the problems that affected Kaupthing were all the fault of the authorities here. That was not the case. I'm afraid you have to look behind this. Iceland, as is well documented now, has been having problems for some time. They decided, not us, to introduce legislation at the beginning of October to effectively be able to take over their banks. And I think that is what set in place the chain of events. What we did, and remember, it's not in the British government's interest to provoke any of this, because the net effect of this is we have had to guarantee the Landesbank depositors. We've had to transfer the depositors who were in Kaupthing and in Heritable, which is another subsidiary, to ING, but we've had to make good in the meantime the Financial Services Compensation Scheme. So we've had to expose the British taxpayer to help people in this country, and I can assure you I would not have done that if there had been any other way of doing it.
But are you aware that many of the British depositors in the Kaupthing Isle of Man Bank were originally depositors, in fact, with the Derbyshire Building Society, who are people working for British companies and British charities abroad, who are not allowed to have accounts in UK banks because they're not resident? Are you not responsible for their interests too?
Well, I think that there's two issues here. There's a specific Derbyshire interest, which I'll ask Lord Turner to deal with. In relation to people who put deposits into a jurisdiction which we are not responsible for, which includes the Isle of Man, then I don't think so. The British government's obligation must be to depositors who have put their deposits into UK banks. And the Isle of Man, for this purpose, is independent of us. It's got its own regulator.
But just before Lord Turner comes in, you did include the deposits of the Bradford and Bingley Isle of Man branch
But it was
in
part
the
of
deal, if I can finish,
Yeah, go on.
in the deal on the 29th of September with Abbey Santander.
Yeah,
so
but
you rescued one lot
Yes,
and
but-
washed your hands of the other.
Yes, because it was part of Bradford and Bingley, whereas the Icelandic subsidiary of the Icelandic branch was actually it was a subsidiary of an Icelandic company, not a British company.
But I just want to be clear, you're washing your hands of the interests of British depositors
No, I'm
who
not.
happen to be working for a charity abroad but happen to have all their savings in an Isle of Man bank. You're saying you're not responsible.
My obligation as the Chancellor of the Exchequer is to people who put their money into this particular UK branch. I may say, Mr. Fallon, that legally, strictly, what we would have said to people is, look, you've got to look for your first 16,000 or so to the Icelandic authorities, because that's what the EEA agreement is. They are disputing that, as I understand it at the moment. We have said, and then we would have stood in the place between 16,000 and the 50,000 under the British Financial Service Compensation Scheme. I've gone further than that. I've said I will look after the interests of all retail depositors in a branch in London that I think we're responsible for. If you go to the next stage and say, look, you should take on the responsibility for something that is done in the Isle of Man or Guernsey, or indeed, by extension, other countries, that is quite a significant step to take. Now, there is a particular Derbyshire point, if you like, and perhaps Lord Turner would deal with that.
Well, just before he does,
Right.
the Treasury spokesman said, on Guernsey, for example, the UK government will represent the Crown dependencies in its negotiations with Iceland. So why are you washing your hands of British depositors in an Isle of Man
Because
branch?
as part of the agreement we have with Guernsey and the Isle of Man, we do, in places, act as we negotiate, because we're the sovereign state. But Mr. Fallon, Isle of Man and Guernsey operate a specific regime, and they quite deliberately, for the tax reasons and others, people choose to go in there. They're regulated by the Isle of Man authorities. Now, I would have to think long and hard, before saying for the first time that the British government would then go and underwrite savings made in another jurisdiction. It's not something that we would likely do. That said, one of the things that we've been pressing on Iceland right from the very start is they really have to go and get help from the IMF. And one of the things that I've said to them, so far as we're concerned, is we would be happy to enter into an agreement with them where we will effectively loan them the money that we're paying out just now. But you would expect, and I expect you'd be the first to criticise if I didn't do this, that we must have an agreement with the Isle of Man, with the Iceland, whereby they will pay this money back to us over a period. Now, the Netherlands are willing to do that, we're willing to do that, but it does have to be part of an agreement with the IMF, because Iceland really does need to have an accommodation with the IMF, such as the nature of its problems at the moment.
Okay, well, those questions were from Julian Williams, Dave Houghton, Klaus Eriksson and Simon Lamb, and many others came.
Could we deal with the Derbyshire point?
Yeah, I think, does Mark, given it's in Mark's constituency, just a
As a Derbyshire account holder, but not with this particular product, obviously I've had people contact me about this as well, so I'd welcome an explanation of how people who invested in a Derbyshire offshore product ended up unwittingly, as far as one could tell, as account holders with an Icelandic bank.
Well, I think
Because they weren't given an opportunity to say, thank you, I'm not going to do that.
we have to be clear that was the Derbyshire chose to sell its business of Derbyshire offshore Isle of Man to Cowpthing, and they then ended up in Cowpthing Isle of Man, which it is important to realise was not a subsidiary of Cowpthing, Singer and Friedlander. It was a direct subsidiary of Cowpthing, Iceland. Now, I'm sure what the Derbyshire would say is that, at least in theory, that did not disadvantage those people because they were being transferred from one Isle of Man registered bank to another. Clearly, however, they ended up in a slightly different situation than they were before. But in legal terms, they did not. I mean, they would still have been an Isle of Man.
The depositors were given no opportunity to move their their savings.
They would have had it at the end of the deposits, the term of the deposits. And let's remember that the transfer was done on the 20th of November 2007, so that those who had deposits which were maturing over the last year could certainly have chosen at the end of that deposit maturity to move their money elsewhere. So I would imagine that would actually be a very significant proportion of them. Now, I accept entirely that they may not have understood entirely the implications of what's going on. Now, they should have, because I have in front of me here the letter. The letter in no way implies that Kaupthing Isle of Man is a UK bank. It in no way implies that it has a relationship with Kaupthing, Singer and Friedlander. It doesn't in any way imply that it is regulated by the FSA, which it is not. But I think we can accept that it is a sorry situation.
Well, it certainly is, because they invested essentially through a British building society and may have imagined wrongly that they would be protected by building society law.
Well, they invested in an offshore wing.
Indeed,
Yeah, that is the complication.
The brand name may well have led them to think that the association was with a building society and covered by the protective envelope of the building society.
Can I say just a couple of things here? This is a case where, again, I think we need to look carefully at what we do. We've said time and time again, people ought to be aware of what it is they're investing in. And obviously, when some of these banks that are not registered in this country, they use names that perhaps don't immediately alert you to the fact they may not just be yet another British bank. And certainly in relation to the Derbyshire experience, that's clearly something the FSA will want to look at, and that people, I think, have a reasonable expectation. And most people who put their money into building society tend not to be going through studying all the form and everything else. I think the second thing that concerns me is that we have a situation here where because Iceland's a member of the European Economic Area, the bank was passported into our system. And it is not a satisfactory situation where you've got a branch here which actually had more deposits than it had back in Iceland, and yet we were not regulating it, and that's not a satisfactory situation.
Well, actually, we raised that in June, Chancellor, at that point, but we're going to come back to this issue. But Graham, a couple of minutes to finish.
Time's very short, so one question, but it may need a response both from or turnaround from the Chancellor. First of all, I'd like to know what role the FSA had in advising the Isle of Man Financial Supervision Commission to require the transfer of £550 million to the UK prior to the freezing of assets in the UK. And the other part of that question, doesn't this mean, the fact that transfer took place, doesn't it mean really there is an obligation on the United Kingdom government to return that £550 million to the administrators in the Isle of Man so that they can fulfil their obligations to the depositors there?
No, it's not the case that we required them to transfer
money.
I
didn't
to
say
the
you
UK.
required.
Okay, I thought you did.
What contact did the FSA have with the FSC and the Isle of Man in that regard?
Let's be clear. The Isle of Man Kaupthing chose to place a deposit with Kaupthing, Singer and Friedlander UK. When Kaupthing, Singer and Friedlander UK, for reasons which we could talk separately, which was regulated by us, we decided it did not meet threshold conditions. That deposit with Kaupthing, Singer and Friedlander became a general creditor like other general creditors, and it will get paid out according to the dissolution of Kaupthing, Singer and Friedlander. The only relationship we have had with the Isle of Man authorities in this is that we have explained to them our general processes of how we regulate banks, including how we would regulate, for instance, Kaupthing, Singer and Friedlander. But we did not give them specific assurances to say this is a necessarily safe bank, because that would not be a reasonable thing for us to do. It is not for us to end up saying to somebody, we can give you an absolute assurance of this. We can describe our general processes of prudential regulation, but at the end of the day, it is for, in this case, the managers and the executive and directors of Kaupthing Isle of Man to make a decision about where they want to place that money, and in particular whether they want to put it in a very concentrated fashion, because I think that is a feature, that this was a relatively large deposit relative to the size of Kaupthing Isle of Man.
And Chancellor, do you accept the responsibility on the British government to return that £550 million to the Isle of Man?
It doesn't belong to the British government. The deposits of the Cout thing were transferred to ING, and the rest of Cout thing's assets here will belong to the creditors. And I don't think that has to be dealt with through the due process. I would just add another thing, that I actually think, having looked at what's happened over the last few months, we really do need to have a long, hard look about the relationship between this country and the Isle of Man, a tax haven sitting in the Irish Sea, where we really and where it's leading to perhaps people not being clear as to what the different rights and responsibilities are. But we can't have a situation where you have sitting there all sorts of tax advantages accruing to being in the Isle of Man, and when things go wrong, people then say, well, what about the British compensation scheme? So it is important that we take this opportunity, not rushing into it, not a knee-jerk reaction, but I think we do need to have a look at it, and indeed that's something your own committee might want to look at as well.
Chancellor, we actually have visited Isle of Man and Jersey on that, and we are going to be reporting on that. But in that graphic note, I think we'll bring it to a halt. Chancellor, the committee a few weeks ago visited Japan to look at their crisis and to see what lessons are to be learned. And one major lesson was that public support is important, but it may be difficult to gain because of the perception that we're just bailing out banks. And secondly, that conditionality applied to public intervention is important, and it helps to secure mainly public support. That was why you were here today to explain that situation. We're very grateful for the explanations you've given, but we're at the start of this inquiry, and we are going on to international regulation and other aspects, and we hope near the end to have you back again, because I think it's been a very worthwhile exercise, and we're grateful to all of you for taking time out of your very busy schedules. Thank you very much.